Hello traders, welcome back to RN Isaac Githinji FX. To our new subscribers, I want to officially welcome you to this great family whereby we learn Forex from the basic up to where we'll be able to analyze and be a profitable trader. To our returning subscribers, I would like to thank you for your great support. And guys, thank you. We have just hit 100 subscribers. So I want to thank you for that. That is a great, we are growing together. That's a great growth that we are doing. So today, guys, this is just a continuation of fractal of market structure in Forex. And today, as I promised earlier, that I'm going to show you the setup that I use, to check, or the setup that I do check before I enter the market. So this is just a recap before we continue, and we say that if you can remember, if you have not watched that video of fractal of market structure, kindly go watch that video, because this is a continuation, and we are going to discuss things into detail. So I know you'll be floating. I know sometimes it will be very confusing. So guys, that was we say that is an external market structure, and we say that inside the external market structure we have the internal market structure. And if you are going to correlate together, if you are going to marry the internal and external market structure together, I can guarantee you sure that you'll be now good to go when it comes to analyzing the market. Okay, so let us just do a quick recap of it, so that I can show you there are some setup I usually check. There's some setup I usually check before I enter any market. Okay, there's some setup that I usually check before I enter any market. Some say that this chart pattern, yes, some say that this a chart pattern, which is still okay. I'll be showing you how different chart pattern we are going to use them in a bullish market structure or in a bearish market structure, so that they can help us to enter the market. Okay, so there's a picture, or there is a screenshot I've sent in my TikTok about Euro Audi, and one of the setup I've used there is I'm going to show you. There's a setup I've used that for sell Euro Audi. I'm targeting around 1:5 risk ratio. Okay, so which are some of the setup. This is what we discussed earlier. And we say that inside an external market structure there is internal market structure, and that is the internal market structure is now the red one, and the external market structure is the blue one. So again, so I'll be showing you when we have come to the end of the retracement. Our work, our swing trader, the work of the swing trader is to catch the whole of this move. So how do we catch this move? How do we enter here? Which are the sum of the setup we look, or I look, when I want to enter at the end of the retracement? Okay, so at the end of the retracement, you will not wait for the end of the retracement on your higher time frame. Let me repeat. You are not going to look for this setup in your higher time frame, but rather we are going to look it in our lower time frame. Are we together? And that's what we call the sniper entry. These are the setup. So what are things that I'm going to look here, so that I can buy and cut the whole of this move? Okay, what are some of the things I'm going to look here, so that I can buy and cut the whole move? Okay, and I told you guys, trend is your friend. Do not try to trade. Do not try to trade what? Do not try to trade the retracement. Do not try to sell the retracement. Okay, do not try to sell the retracement. If you are not a pro in forex trading, do not try to trade to trade what? Retracement. What do I mean? Simply, I mean, do not sell when the market is buying. Do not sell when the market is bullish, and do not buy when the market is bearish. So today let us discuss on what some of the setup I check here, so that I can use them to enter this market. Okay, to enter this market, and I'll be showing you both the bullish and the bearish. Okay, and some say this is the reversal. This is the reversal in the internal market structure. In the internal market structure, we say now the trend has been has reversed from being bearish to bullish. So there are some of the setup I look during reversal. Okay, so let us continue with today's topic, and let us start with the bullish reversal. Okay, let us start with the bearish reversal. Let's say if your higher time frame is bullish, the one I've just drawn, and when it comes to your lower time frame, you find that it was bearish. Okay, so how are we going to change from being bearish to bullish? That's what I mean. So there are some setup I usually check. Number one is what I call the double bottom. Like that. Okay, this is very simple to trade, okay. A double bottom is like a W. Are we together? A double bottom is like a W. If you are sure that your higher time frame is bullish, and when you go to your lower time frame, that is internal market structure, you are looking for buying position, you have to check this pattern. If you want to be a profitable trader. And this pattern always work 80%. It always work. Are we together? So this is how a double bottom look like. Okay, this is the first bottom and this is the second bottom. Are we together? And this is our neckline. These are the features of double bottom. We have first bottom, that is what we call simply first leg, second leg, and we have a neck. Okay, we have a neck. Are we together? So how do we trade this pattern? We trade this pattern once the price break the neckline. We are going to enter here to buy. Are we together? Once the price break the neckline, let me draw that neckline with a blue horizontal line like that. So we are going to buy from that point. We are going to place our entry from that point to buy. Are we together? So with that, we will be now flowing in the overall trend. So we are going to place, so we shall wait for this neckline to be broken. Okay, and then retest. Once it has been retested, we are going to place an entry from there to buy. Are we together? That is one of the pattern I usually look. Okay, and how are we going to set our TP? Let me show you guys that most traders will not show you or tell you, but this I will tell you for free, because I'm here for you to learn. I'm here for us to grow and learn in forex trading for free. So how are we going to trade this forex this pattern? So let us say you have gone to your lower time frame, that is micro time frame, and you have found something like this. So how are you going to trade this trade? You see the distance between the legs, the distance between these two legs. Let me show you. The distance between these two legs and the neck. Let me show you guys. You see the distance between the neck and the two legs. Okay, once the price has break the neck, this is for free, guys. Once the price has break the neck, the distance between the neck and the two legs, the price will go up that distance. Are we together? So let us draw that neck with a blue line. I'll be showing you guys. So once you see something like that, I know somebody will ask me, now where do I place TP1 or TP2? It is very easy. Guys. These are free information. So the distance between the neck and the two legs, okay, the distance between the neck and the two legs, the price will go to that distance. Okay, the price will go to that distance to finish the race. Okay, the price will go to that distance to finish the race. So your TP will be a half of that distance. TP1 will be a half of that distance. TP1 will be a half of this distance. TP1 will be a half of that distance. And once the TP1 is always guarantee. TP1 is always a guarantee, guys. So TP1 is always a guarantee. Once the market break the TP1, once the market breaks the TP1, let's say the TP1 is always a guarantee. So make sure you have used a good lot size to catch this distance. Okay, make sure you have used a good lot size. Maximize your profit from here, TP1. Are we together? Maximize your profit from TP1. Okay, so once the price action break the TP1, okay, because let me repeat something. Okay, price always have a tendency of breaking the neck, going to the TP1 like that, and retracing back. Most of the time you shall find like that, and retracing back to either here or to this point. Okay, it always do like that. So once the neckline is broken, maximize your TP1 very well. So the market will always do like this. It will go and hit the TP1 and then come back to your entry, or even enter, or even go down below. Okay, that is how the market does. Okay, so once the TP1 is hit, expect some retracement. Expect some retracement. If the price will not break your entry, if the price will not break our neckline now here, if the price will not break our neckline with a body candle downward, that will be our bearish body candle, we shall still enter. We shall still enter. Let me draw for you. We shall still enter for buy to TP2. We shall still enter for buy to TP2. Okay, so maximize your profit once the price hit the TP1. Okay, maximize your profit. Sorry, once the price break this neck, maximize your profit to TP1, because now the price always love to go back and retrace to your entry position. Are we together? If you are not going to come out of this trade, trail your stop loss now to either break even or to the profit. Are we together? So you will find that the price action always tend to go back to our entry position, and if it will not break downside here, if it will not break our neckline with a bearish candle like that, if it will only retrace back to here, we shall enter again, place our position to TP2. TP2 is the whole distance. Okay, TP2 is the whole distance. That's how we are going to trade this pattern. That's how we are going to place the trade in this pattern. Are we together? That's how we are trading. That's how we are trading this pattern. So we have said that, let's say that is our TP. That's the whole distance. TP1 is there. Then we are now going for TP2. So once the TP1 is broken, be assured we are going for TP2. Once the TP1 is broken, be assured we are going now for TP2 to finish the distance. To finish that distance. Okay, so that is one of the pattern I usually trade, or I usually look forward. Okay, so I repeat, this is a W. This is a W pattern, and it's also known as the double bottom pattern. This is the future of that double bottom pattern is the two legs and the neck. Once the neckline is broken, aim for TP2. Aim for TP1 is always a guarantee. Take your TP1 and trail your stop loss to either break even or to the profit side, so that the market always, once the market hit the TP1, it always find a tendency of going back to the entry. Okay, going back to the entry. Why? They always know that this big institutional market, they always know that Most traders know how to trade this market. So they will always come for stop losses for the early buyers. Okay? So they will always do that. So once the TP1 is hit and the market retraces back to our entry, if the market will not break this entry or our neckline downside with the body, we shall place an entry again to TP2. Are we together? That is one setup I usually look for long, for bullish. Okay, that's one setup I usually look for a bullish. And nowadays you will not see such a clear pattern. You will not see such a clear W. Okay, you will not see such a clear W. I would like you to go and teach yourself to see this thing. So I will show you how sometimes this W will present. Okay, I will show you how sometimes this W will present. You will find that this W present like this, like that. Okay, that W will be presented like that. Okay, so I would like you to go and do practice and know how to see these patterns. I would like you to go and see this pattern. Do more practice to go and see these patterns. When you are able to see the pattern very clearly in your micro time frame, now we shall go to your entry time frame or confirmation time frame to place an entry once the neckline is broken, and take the TP1, wait for the retracement, then take for the TP2. Once the neckline, once TP1 is broken, always a guarantee sure. Once it is been retested, take for the TP2. Are we together, guys? So that is one of the pattern I usually check. Another pattern is head and shoulder. Another pattern is the head and shoulder. Now it will be the inverse head and shoulder. Inverse head and shoulder for bullish. Okay, if your macro time frame, mine is weekly and monthly, if your macro time frame shows that this market is bullish, I will go to micro time frame for either daily or 4-hour time frame to check for my setup. And one of the setup I've shown you is a double bottom. That is what we call a W. Another setup is what I'm going to show you, a head and shoulder. How does a head and shoulder look like? I love this pattern because it will always work. How does it look like? I would like you to go do more practice before you start trading with the real money. Do more practice and start seeing this chart pattern and this setup. Do more practice. Are you together? So the features of the head and shoulder. Number one, we must have the shoulder. We must have the right. This is our right and our left shoulder, and then the head. Are you together? Let me draw that line so that you can see. Those are the features. Those are the characteristics of inverse head and shoulder. You must have those three things: the right head, the right shoulder, left shoulder, and the head plus the neck. Are you together? And we always say the shoulders are the support. I hope I'm clear. The shoulders are the support. So these are the shoulders. That is the shoulder. That is the right shoulder. The left shoulder. Let me show you the left shoulder, guys. So this is the left shoulder. And then our head is always a liquidity grab. All manipulation, I call it manipulation, liquidity grab. Okay, the head is always a manipulation or liquidity grab. Okay, like that. This is now the head. I hope I'm clear. And then the neck. We must have a neck there. we must have a neck here there. So those are the features of the inverse head and shoulder. Those are the features of inverse head and shoulder. We must have the right shoulder, we must have the head, we must have the left shoulder, and we must have the neckline. Are we together? Those are the things that I check for this pattern. We must have the right shoulder, the head, and the left shoulder, and our neckline. Are we together? So how are we going to trade this? How are we going to trade this? Once I check in my micro time frame, that is either daily or 4 hours, once I see this pattern, guys, once I see this pattern, if you are aggressive trader, you will place your entry in this left shoulder to buy. You will place your entry in the left shoulder to buy. Okay? To buy. And your stop loss will be at the head. Your stop loss will be at the head. What do I mean? You will come, place this your entry at the buy like this. So you will wait for the left shoulder to be formed, place your entry at the buy like that, place your entry at the buy, then your stop loss, it will be on the right, it will be the head. Okay, your stop loss will be the head, and your taking profit one, it will be at the neckline. This will be your taking profit one. This will be your TP. So you're going, if you are aggressive trader, you're going to place your entry at the left shoulder, the stop loss will be at the head, TP1 it will be at the neckline. Are we together? TP1 it will be at the neckline. Are we together, guys? But if you are going to be a conservative trader like me, I'm a conservative trader, okay, I shall be waiting for the neckline to be broken for me to be sure that we are now changing the character. We have now a reversal. Okay, I shall be waiting for this neckline to be broken. I shall be waiting for this neckline to be broken. Are we together? I shall be waiting for this neckline to be broken up, and then a retest. And then a retest. Are we together, guys? And then a retest. The price, the rule of this setup is, once the price is retesting, it must not break the neckline downward. It must not break the neckline downward with a full body bearish candle. It must not break the neckline downward with a full body bearish candle. So I will enter here. I will place my trade here. So where will be our TP1 and the TP2? You see the whole of this distance. The whole of that distance. The whole of that distance. The TP1 and the TP2, we are guaranteed sure the price will go up to that distance. Okay, so I'm going to place my TP1 at the half of the distance. I'm going to place the TP1 at the half of the distance like that. This is my favorite set pattern. This is my favorite setup. I usually check. Once I see this setup, I love it, so because I know now we are going to milk the dollar. So TP1 it will be at 50% or a half of the distance. Okay, TP1 will be a half of the distance like that. TP2, you will wait for TP1 to be broken, then take the TP2 to finish the distance. Are we together? I hope I'm clear. I hope I'm clear. So once the neckline is broken, guys, once the neckline is broken, aim for TP1. It is always a guarantee. TP1 is always a guarantee. So maximize the TP1. Aim for TP1 here. So once this is broken like this, and then retested, and the candle, the rule of this setup is the candle should not break inside or break downside below this neckline. Okay, so the rule of this setup is the price, sellers will not break this downward. Okay, so we are going to enter here, take the TP1. So I will maximize TP1 very well. I will maximize the TP1 very well. Take the TP1. Once the TP1 is hit, or once we have smashed our TP1, the price always find a tendency of retracing back to, to almost the entry position, always to almost the entry position, so that it can liquidify the early buyers. It can liquidify, it can take the stop losses of early buyers. Okay, something like that, and then break our TP1. So we shall place our entry 2 here. Once the retracement has ended, place our entry 2. Then and hold that trade. Once TP1 is broken, we shall re-enter again for TP2. Those are the setup I'm looking for bullish. Those are the setup I'm looking for bullish. If my macro time frame, my major time frame is bullish, and I go to micro time frame, I find such a setup, I usually enter like that. So this will be a TP1. This one will be our TP1. Let me show you. This one will be our TP1 and this one will be our TP2. This setup always work miracles. This setup always work miracles. 85% of this setup will always work. Okay? I hope I'm clear. I hope I'm clear. So I want you to go teach yourself, practice to see this setup. Practice to see this setup. Okay? I want you to go and practice to see this setup. Are we together? But I will tell you, this is a disclaimer. It will not be this clear the way I've drawn it. It will not be like this. It will have different manipulation. For you to know that this is an inverse head and shoulder, you must have practiced a lot, because nowadays the market structure always change. It is so dynamic, because they will try to manipulate you. They will not give you a clear setup like this. Are we together? So they will manipulate you. Let me show you how this setup will look like. Let me show you how this setup will look like. Okay, sometimes you might see like that if you see like that, my friend, that is a very clear setup, easy to trade. But now be cautious, because now they might try to fake you. They might try to manipulate you. Sometimes you may see like something like this. Sometimes you may see something like this. So be cautious. Be cautious, guys. Sometimes you may see something like this. You have to understand. You have to teach yourself and practice more. Practice more. Practice more on, so that you can see this setup I'm teaching you guys. Practice more so that you can see this setup. Sometimes it may come like this. Sometimes it may look like this. Okay? So this is our right shoulder. This is our left shoulder. And this is our neckline. Our neckline is not here. This is our neckline now. Okay? Are we together? So I'll be teaching you on factors to check. So first of all, I want you to go and see this pattern. See this setup. Okay? Go and see this setup in your live market. Go and see this setup. I'll be showing you. In the next class, I'll be showing you. Okay? How these setups look like. Okay? There are some factors I usually consider also. Okay? And that is now for the advanced trader. That's for the advanced trader. But for now, we are a beginner trader. We are going to just know this for basic information. Those are the setup I'm looking for. If now the market, if my macro time frame is bearish, let me draw for you macro time frame. If the macro time frame is bearish, the opposite is very true. Let me draw for you the macro time frame. Your higher time frame is bearish like that, and then your internal structure your internal structure will look like this. This is what I'm calling the fractal of market structure. Okay, we did that we did that class and I illustrated very well. If you have any question, please feel free to ask. I'm here to help you. So let us draw very fast. Let us draw very fast the internal market structure. You shall see something like this. Let us draw something like this. You shall see something like this. So you shall see something like this. So if you know how to marry these things together, now you are going to be a very profitable trader. Okay, if you know how to marry the internal and the external market structure, the fractal, if you understand the fractal of market structure, things will be now easy for you, because now you are going to teach yourself or practice on how to see the setup I'm going to show you, and just trade the easy way that I'm going to show you, and you are going to 80% of your trade they'll be in profit. 80% of the trade you are going to see or to enter, they will be in profit. They will be in profit. Okay, that is now our internal market structure. That is now our internal market structure. That is our internal market structure. So the red one is the internal and the blue one is the external. So our work as a swing trader is to catch that distance before after the retracement. Okay, so when we say that in bearish market structure, it always creates a lower low and a lower high. Okay, this lower low is lower than this one, this higher is lower than this one. Okay, and we say that this is what we are calling a retracement. Do not buy in a bearish market. Do not buy in a bearish market. So our work is to catch this from this inverse, from this point, to catch the whole of that movement. That is our work. So we are going to know how are we going to catch this trade from here at the peak of the reversal, at the peak of the retracement, sorry, at the peak of the retracement, and catch the whole movement. Okay, before the price retrace again, and catch from this peak of the retracement to downside. So that is our work. So let us know how or what are the things that is happening here before the price continue, before continuation of the of our road direction. Are we together? So what is going to happen here? That's what I'm calling the setup I'm looking for. The setup I'm looking for when it comes to my macro time frame. So it is the opposite of bullish. It is the opposite of bullish. Why am I saying so? Now remember, in bullish we were looking for the first setup is we were looking for a W. Okay, we were looking for the W. Now in bearish we shall look for the double top. We shall look for the double top. We shall look for the double top. So in bullish we were looking for the W like that. Okay, this is in bullish. We have a double bottom, sorry, we have a double bottom here. This is in bullish, but in bearish it is the opposite. This is in bullish. This is the first leg, the second leg, and the neckline. Okay, this is the first leg, the second line, and the neckline. But now in bearish we shall look for an M pattern. We shall look for an M pattern. Let me draw for you an M pattern or double top. The same way, it's like a W, then it's like an inverse of the W. So how are we going to trade this an M pattern? An M pattern look like this. Okay, can you see? An M pattern look like that, but it will not be that clear when during the chart. When you go for your chart pattern, it will not be that clear. So you have to teach yourself to see an M pattern. So the characteristic of an M pattern is the same. We have the first leg here, the second leg here, and we must have the neckline, and the neckline must be broken downside. Are we together? So we have the first leg, the second leg, that is what we call the first top, the second top, and the neckline. Are we together? And the neckline must be broken. Our neckline must be broken. Our neckline now here act as a support. Remember in bullish, the neckline of the W acted as a resistance. Okay, so our neckline here act like a support, so it must be broken. It must be broken. And how are we going to trade this pattern? How are we going to trade this setup? It's so easy. The same way we traded the W, we are going to trade this pattern the same way. So if you say, let's say that the price came and broke this neckline and it retested from here, so we are going to place our entry position, okay, with a rule. We have a rule here. Then this price action must not break this neckline upward, because if it break the neckline upward, okay, we might be forming an inverse head and shoulder. We might be forming an inverse head and shoulder. Okay, so the rule number one of this pattern setup is, if the price will retrace back to the neckline, it must not break this neckline. The buyer should not break the neckline with a body. If they break the neckline with a body, now this setup is the fake one. We shall be forgetting this setup. Are we together? We are going to forget. It has violated our rule. Are we together? So let's say that they have not break this neckline with the body, the buyers. So we are going downside like that. So where are you going to place your TP, TP1 and TP2? The same way we said in W is that the whole of the distance between the two legs and the neck, we are going to place that TP. Okay, that will be our TP. Let me draw for you. The whole of this distance, it will be our TP downside like that. Are we together? So we first secure our TP1 because now it's a guarantee. The same way we traded the W is the guarantee. Okay, we secure TP1, and now once the TP1 is broken and retested, we are going to secure the TP2. We are going to secure the TP2, and now we shall say that the price has finished the race. The price has finished the race. That pattern has fully developed. Okay, so that will be our TP2. The same way we traded the W, we are going now to trade that pattern, but now we were buying W, but now here we are going to sell in double top. Are we together? I hope I'm clear. So what do I mean? So we are going to target our TP1 like that. We are going to target our TP1 like here. So we shall enter here, target our TP1 up to here. Once the TP1, I've always seen that once we hit our TP1, the market have a tendency of retracing back to our entry. Okay, of retracing back to our entry. The rule still stand out. It must not break our neckline with a body. Once it break our neckline with a body, we be now seeing a possible inverse head and shoulder. Are we together? So it must not break this with a body. So if it will retrace back to the neckline and not break it with the body, we shall re-enter again and wait for the TP1 to be broken. Still hold that trade. Then once the TP1 is broken and retested, okay, we shall re-enter again here and target TP2. Easy peasy. Are we together? Easy peasy. That is the rule of that pattern. That is the rule of that setup. That is the rule of that setup. Okay, so let us continue. You remember in bullish we say there is inverse head and shoulder. The next setup for bearish is the head and shoulder. Is the head and shoulder. Is the head and shoulder. Let me show you the head and shoulder. Okay, and I always tell you the head is the liquidity grab. The head is the liquidity grab. The head is the liquidity grab. Are we together? The head is the liquidity grab. The head is the liquidity grab. So you can see most of us will not tell us that this, most of us will argue that this is not a head and shoulder, because you are expecting me to show you clearly head and shoulder. But when you go to the market, the real market, it will not give you the clear head and shoulder. It will not give you the clear head and shoulder. They will try to manipulate it. They will try to manipulate it. They will try to hide it. Okay? So it will not give you a clear head and shoulder. So the features of the head and shoulder is the same as the inverse head and shoulder. You must have the right shoulder, the head and the left shoulder, and then the neckline must be broken. The neckline must be broken and enter. If you know how to trade the inverse head and shoulder, you will know how to trade this head and shoulder now. So this will be our right shoulder, the neck, the head, sorry, the head, the left shoulder. Now here, where is our neckline? Where is our neckline? Here. Where is our neckline? Are we together? Here, let us ask ourselves, is this our neckline? Is this our neckline or this is our neckline? So, which is our neckline, guys? I always say that will be our neckline. Okay? That will be our neckline. Why? I know majority will say that the first lower low, it will be our neckline. The first lower low will be our neckline. Okay? Remember, I'm telling you, this will be a fake out. This will be a fake out. Okay? This internal one, it will be a fake out. It will be used to fake you. It will be used to fake you so that you can see that maybe the bullish, you will see that maybe there is a retracement, there is a bit of retracement and go up. Okay? So they will place their entry here. They will place their entry here to up, for buy. Remember, their stop losses are here. So the market, this big institution, they know that. So they will use you. They will induce you. Sorry, that's the right word. They will induce you. This one will be like an induction. They will induce you. For buyers, they will induce you to buy from here, thinking the price will go up. Are we together? So you will buy from here, place your stop loss here. Are we together? So they will come for your stop losses. They will come for your stop losses. I always say this is now our neckline. This is now our neckline. This is now our neckline. So how are we going to enter this? As usual, if you are an aggressive trader, you are going to place your first entry here. You are going to place your entry 1 here, targeting this point as a profit, taking profit 1. Let me show you. Targeting that place as a taking profit 1. So you are going to place an entry here at the left shoulder, targeting this, targeting here the neckline. Okay, and your stop loss will be at the neck, at the head. Okay, the stop loss will be at the head. Okay, so you are taking profit 1 will be there at the neckline. And I always say, if the neckline is not yet broken, close that trade. Close that trade. Okay, so that is how you are going to enter if you are an aggressive trader. But if you are a conservative trader like me, you shall be waiting for that neckline to be broken. You shall be waiting for this neckline to be broken. Remember, wait for this neckline to be broken and being retested. The distance between this neckline and the shoulder, this is the distance. So the price will go that distant downside. Okay, so you are going to take the half of it as a TP1. You are going to take a half of that distance as a TP1. Then let me show you the same way we traded inverse head and shoulder. It's the same way. So we are going to take the we are going to take the half. Sorry guys, we are going to take the half of this. So let us mark the distance first. That will be the distance. So we are going to take that distance. A half of it will be our TP1. That's a guarantee sure. That will be our guarantee sure. A half of it is a TP1, a guarantee sure. So you are going to maximize TP1. Maximize your TP1 very well. Maximize your TP1 very well. So our TP1 will be like there, and our TP2 will be here to finish, to accomplish this. We shall say now this setup is, we have finished the setup, okay, is fully developed, okay. So our TP1 will be there and our TP2 will be there also. So the rule is, remember, once the price hit the TP1, it always find a tendency of going back to our entry zone. So the price will come, we shall enter there, take a TP1 here. Always the price always tend to retrace back, to where? To retrace back to our entry zone, okay. But the rule is, it must not break, this neckline. It must not break this neckline, okay. So if it does not break the neckline, it does not break our trending, our trading rule. It does not break our trading rule, okay. So set of rules. So we shall enter again and hold that market and hold that trade. Once it has broken our TP1, we are guaranteed sure that we are going now to enter for TP2. Are we together? If you have any question or you have a concern, please remember to comment down below. I want you to learn to see this pattern. I want you to learn and see this pattern. I want you to practice and practice more. Go, okay? Go to your trading view. Try to see if you are going to see this pattern. Those are the 4 patterns I always look. Those are the 4 patterns I always look. So the next lesson, I'll be showing you how this pattern keep on changing. I'll be showing you how this pattern keep on changing. What do I mean? I'll be showing you how the double bottom can change, okay. I'll be showing you how the double bottom can change to be a head and shoulder. I'll be showing you how this double bottom can change to be a head and shoulder. I'll be showing you how the double top can change to be, are we together? How the double top can change to be a W. I'll be showing you all these things. I'll be showing you all these things, okay. I'll be showing you all these things, okay. I'll be showing you how this double top can change to be an inverse head and shoulder. I'll be showing you all these things. And that's why I tell you, you must have a set of rules when you are trading. You must have a set of rules when you are trading, guys, okay. If that rule is violated, no matter what, do not enter that trade and forget about it, okay. So the next lesson, I'll be showing you how an M pattern can change to be an inverse head and shoulder, how a W pattern can change to be a head and shoulder. Are we together? Otherwise, have a blessed weekend. I want to wish you a blessed weekend. If you have any question, please comment down below. I'll be glad to help you and answer you. If you have not understood, if you don't have a clear if you don't have a knowledge about Forex, if you are a beginner, please go to our class, the first class I made, and I've already explained everything, okay. So thank you for your support. Continue subscribing, continue sharing, continue informing your friend. Let us learn together and grow together, okay. This is a free information I am teaching you. Peace out, guys. Thank you.